How's it, guys? Welcome back to FX Rhapsody. Today I just want to show you a quick little entry that could have had you, let's make it 2 entries if you were daring, that could have given you over 200 pips already this week on the EURUSD dollar. But before we hit the charts, just go visit my website on the bottom left corner over here, where you will find previous analysis. You will find some previous trading material for those of you that's getting started in trading. It is very helpful. There's some nice categories, there's some nice videos that you can go back to, and especially for those of you that's a little bit more advanced, I've got some nice cool strategies over there as well. Also, preferred brokers, these guys are brilliant when it comes to having a reliable broker behind your side, so just go check them out, guys. Okay, so let us hit the charts. So we are just looking at the Euro USD dollar. Okay, nice little entry. Again, there was 2 entries, but let's just talk about the first one. First one's going to be on the hour time frame. So as you can see, that what we have is the 2 lines. For those of you that watched my previous analysis of the weekend, know that these 2 lines were put over there so that we can just react to what price does when it gets or break those lines, and then we just react to what price gives us. Okay, so as we could see, price opened and it broke above one of these lines, the top one. So price went above it and then came back and retraced. So what happens now is, I want to show you, and I've talked about this a couple of times. If you have a couple of bearish candles, okay, especially these long ones, and you have a bullish candle in between, this candle acts as a support candle. Okay, you can have it vice versa for a couple of bearish candles and then a bullish candle in between, but always note these candles. I'm just going to point it out to you for those of you that's not aware. So that candle, so you have a support candle in between those candles, so that acts as a support. So that is where I put my Fibonacci from. So I take my Fibonacci because we see that price broke and it broke above it and then came back and retraced. So I take my low from my Fibonacci from that tip of that wick, and I draw it from the top of that wick. So you have your swing low and you have your swing high. Okay, so a lot of guys would have had this as my swing high, but as you can see, price did not. I'm talking about this candle. So price did not retrace all the way back, so it just made another higher high basically. So I'm just gonna so I'm just going to do that again. So that is going to be my swing high, and then price came back and retraced nicely in between, or to my 62% area. Beautiful entry, as you can see. Just going to highlight it out for you. That's the area that I'm concentrating on, okay, when it comes to my Fibonacci retracements. So I'm looking at that area between the 62% and the 79%, and that is where I place my entry. Usually when price breaks that 62%, the first line, that is when I would place my trade. My stop loss just below the 79. It depends, okay? There's a lot of factors that plays, but in a case like this, you would have had a nice tight stop loss. I just wanted to show you an example. So basically something like that, okay? That would have been my risk. So, and as you can see, price eventually just went up, and it, what is that? A 1-to-5 ratio, almost 1-to-6, 150 pips that it went up. Okay, so that's your first entry that you could have taken on the hourly time frame. Okay, so let's all keep that in mind. I'm just going to take this out because I want to drill down to the 15 minutes. Because with the 15 minutes, let's just go back one more. I just want to show you. Now, as price went up, it made another retracement down. Okay, so excuse me. There's two ways that I trade. Okay, there's going to be your Fibonacci and there's going to be your fair value gap. Now, as you can see, price retracing to this area over here, right there. Okay, that's the area that price retraces back to. As you can see, that's your area right there. Now, looking at the hourly time frame, there's no fair value gaps. Okay, that was created. If you take your Fibonacci, there's no retracements to the 62%. So where is my entry on this retracement? How do I take another trade? Either if I'm in this first one, or if I missed that first one, how do I get into this trade? Well, let's call it, how do I get comfortably into that trade, knowing that all my tick boxes is ticked, meaning it's either a fair value gap that it retraces back to, or it's a retracement to the 62%. Okay, so that is where you go down to your lower time frames. So if I go down to my lower time frame, that is my candle that was my line that was broken. This is now the 15-minute time frame, guys. Okay, so that is my line that's been broken. Remember that I told you about that bearish candle, okay, in the hourly, and this is the bearish candle in between the bulls. That's the effect on the 15 minutes that it makes. So that is where I took my Fibonacci from there all the way to there. Okay, that was going to be my swing low, my swing high, and my 62 retracement. Do you all see that? Okay, so on the 15 minutes, that is what it looks like, and you all just saw it on the hourly time frame. Okay, so let's just take that out again. So now we're in this trade, okay, on the 1 hourly time frame, we're in this trade, and trade is going up. Now, for those of you that missed it, you want to climb in. Maybe for those of you that's in the trade, want to climb into another trade, or just have that confirmation that price is going to go up and stay in that trade and not retrace and hit your stop losses and all that. So now again, 15 minutes time frame. So I'm just going to extend this, okay, so we can all see. So as you can see, price breaking that area over there, breaking that line. We can actually take that out. Just wanted to do this there. You can see that little structure being broken. Okay, you can see this bullish candle that was created. All right, everybody sees that. I'm just gonna zoom in a bit, so you can see that bullish candle being created. Do you see a fair value gap that gets created? You don't see it on the hourly time frame, but you see it on a lower time frame. Okay, so that is your fair value gap. So there's your confirmation. So a lot of guys will climb in with that candle. Fair enough. Price goes up, comes down, taps into the fair value gap, into that imbalance, and that is where you place your entry. Okay. But as you can see, I'm just going to zoom out a little bit. What price does is, excuse me, price just hovers here the whole time, and eventually coming back into that fair value gap again, and then shoots up. Now, for those of you, if you climb into the trade over here and you have your risk just below that fair value gap, you will be safe. Okay, you will definitely be safe, as you can see that, because price did not touch or tap your risk, your stop loss at the bottom, and then eventually price shot up. For those of you that was a bit, impatient and saw price coming down and climbing out, or a lot of guys would place their trade and then they will move their stop losses up. And eventually, and if they move their stop loss up, if price just went a little bit up and they, move that stop loss up just above break even, let's say that, and then you would have seen price tapping your stop loss eventually, basically taking you out and then shooting up. Now, I've got this thing, and I have told you guys before, and I have showed you guys before. I'm just zooming in a little bit. When there is a fair value gap that gets created, what I usually do is I just take my Fibonacci from the tip of the first, or to the, from the top to the bottom, or bottom to top, doesn't matter. I take halfway, or the half of that fair value gap. Okay, that's your 50%. Let's just take this out. Okay, that is going to be my entry mark, just to be safe, right? So as you can see, the first, zooming out a little bit, your first little pullback of that fair value gap or of that candle did not reach my entry, basically. That is going to be my entry point. But if you extend that halfway, so that's going to be halfway of that fair value gap, you could see that that very last candle tapped into that right there, and that is where I place my entry. So my risk is a little bit smaller now, because if I had my entry over there, okay, over there, okay, I would have had a 16 pip stop loss. If I had my stop loss just below that fair value gap, would have been a 16 pip. But if I had that, okay, I'm just moving it across because that will be my entry. My risk is now 9 pips. So that just brings that risk a little bit smaller. So you have a tighter entry with a tighter stop loss, tighter risk, guys. So that is just what I wanted to show you. Again, if you were in the first trade, brilliant. Okay, then this would have been confirmation that the trade is going up again, because that's your entry. And as you can see, price shooting up. Okay, so price shooting up. Let's put it like that. Let's have your risk there. Price shooting up. Another 100 and odd pips. Let's call it 120 pips. As you can see, let's just move across. Yep, price is consolidating there. So we had 150 pips on your first entry. Okay, if you allowed price to go up all the way, you had another 120 pips if you entered again. So that's over 270. You could have had 150 pip for the first entry, and if you taken just this one, if you missed this other one, it would have been another. So either way, you would have had over 100 pips just on this currency pair, doing either the scenarios, either the fair value gap or the Fibonacci. And then another thing that I just wanted to show you, which is just a little bit more confirmation. You have price going up, going down, creating a little swing low, price going up again. Okay, that's your swing high, as you can see there. Just taking this out, bam, because we all know that's going to be our entry right there. Okay, so we drag it across. Where does price go to? It retraces to the 62%, guys. Okay, confirmation number 2 that this is a nice valid entry. So again, Fibonacci, fair value gap, those are the only 2 things that you need to be able to trade and get some pips on your account. So guys, I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit that subscribe button, show me some love hitting that super thanks button, and hit that notification bell. There's definitely more video content coming your way. So guys, I hope you've been having a wonderful week. Stay safe and happy trading, guys.